be real, no one wants to get audited. It's tedious and stressful, and we'd all just rather avoid that. So how do you do that? Well, I can't guarantee that you'll never get audited, but I can help you minimize the risk by giving you a sneak peek into what auditors are really looking for. Yep, I'm talking red flags. Those write-offs that look just sketchy enough to make the IRS think they deserve a little bit more attention. Those are the ones that you want to avoid. Ready to find out what they are? Let's jump in. First red flag, excessive meals and entertainment. High meal costs look a little sus, especially for an online business. And especially if they're showing up every single month, unless you truly are traveling every single month. As with any travel costs, make sure that you have legit receipts to show that you really were on a CEO retreat or at a conference or something that really was related to your business. Without receipts that show a believable justification, high travel and food costs are red flags when you run an online business. Also note that most entertainment expenses are just not deductible. So what sort of meal expenses are deductible? Most business meals with a client are 50% deductible. Also want to note that this video was made in June of 2023, so make sure that you look at the current IRS rules and regulations. Other 50% deductible meal expenses include meals for an in-office meeting, snacks or coffee for your employees, and meals while traveling or meals at a conference. However, meals that are part of a recreational employee event like a holiday party are 100% deductible. Any meals that are an essential part of doing your business are fully deductible. For example, if you are a food blogger and you make meals to take pictures and then post recipes, that is 100% deductible. So what does excessive truly mean? It's not as much about a dollar value as it is about your business revenue, your industry, your growth, and your history of profit. Basically, they will look at your business, your industry, your past tax returns, and decide that any expenses under a certain threshold are fine, but any expenses that are above that just deserve a little bit more examination. There are always exceptions to that though, because even small expenses can trigger an audit. If you treat a potential client to a business lunch and you end up landing that client, that's probably a legitimate business expense. Your expenses should directly correlate to you making more money in your business. Say it again for the people in the back. Your expenses should directly correlate to you making more money in your business. But if you go to work every single day at a coffee shop and get a fancy latte and a scone, that is not a deductible meal expense because it's not with a potential client, it's not with a team member, and is not correlated to making more money in your business. Womp womp. I know that one's really hard. I work at a coffee shop every single day. So what about giving your clients gifts? Yep, that can definitely be a red flag if your gifts are excessive. So the IRS actually allows us to deduct $25 per person per year. If you have 10 clients, the most that you could deduct for a tax year is $250. But hear me when I say this, you can spend as much as you want, you will only be able to deduct $25 per person. There is some kind of gray area if you give branded gifts, gifts that have your brand or your logo all over them, but check with your CPA because some risk-averse CPAs will actually not let you deduct that. It's really the level of risk that you're willing to take. And one thing that I want to also mention as we're talking about all of these business expenses is the acronym ON, O-N. When you're thinking about what's deductible for your business, what is ordinary and what is necessary? Is it ordinary for your industry? And is it necessary to keep your business running? Expenses that are atypical for your industry may raise red flags. There is no way to guarantee that you'll never get audited, but you can reduce the risk if you avoid raising red flags with excessive deductions. Always follow the IRS rules for deducting meals, gifts, and travel. Always ask if an expense is necessary for your business and ordinary for your industry. Make sure you're including all of your business expenses in your books. If your bookkeeper has worked as an auditor, they can help you identify potential red flags. Want help with your books from a team that really cares about you and your business? That's MADISON Dearly Bookkeeping. We'll help you keep your expenses and revenue straight so you can make decisions to grow your profit. Plus, we'll give you all the reports that you need to give to your CPA during tax time. Get more information for our services at the link below. See you next time.